The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 20th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and provide you with tools that empower human potential. Because living up to our potential, folks, that is something we must master each and every day. So let's begin with a few empowering beliefs. The first one, brought to us by George Adams. He said, what we think means more than anything else in life, more than what we earn, more than where we live, more than our social position, and more than what anyone else may think about us. I like that thought. That's a good thought. How about this? Brought to us by William Shakespeare. He said, it is the mind that makes the body rich. Ooh, I love that one, especially on Fridays out here, because on Fridays, you know, you've got Nico and Paige, and they're making the body rich, but it's really the mind that makes the body rich. How about this? Only by much searching and mining are gold and diamonds obtained. Think about that. Only by much searching and mining are gold and diamonds obtained. A man can find every truth connected with his being if he will dig deep into the mind of his soul. And that he is he is the maker of his character, the molder of his life, and the builder of his destiny. That, from James Allen, As a Man Thinketh. That's a book, set of CDs, everything, set of CDs that you should absolutely have inside your library. So I say this, the question for each person is not what we would do if we had the means, the time, the influence, and the educational advantages. The question is, what will we do with the things that we have? Why? Because you do have an amazing power within yourself. Let's go check out the power of these markets here right now. The Dow is up 15 points, trading out at 15,026. S&P is trading up about 4 at 1650, we'll call it. Composite up 11 points at 3,600. Russell 2000 up 5 at 1018. Google's up $3.64, offset by Apple, which is down $3.60. Microsoft is up 35 cents. Intel up 23. Cisco up 14. Ticks leading the charge to the upside. Netflix up about $7. Google up 338. Urban Outfitters up 350. Tesla Motor up 332. Bob Evans Farms got a little nice sausage that they're grilling out there, up $3.21. We'll have breakfast with Bob Evans. You got NetLease up $3. To the downside, Lightbox Holdings. We're going to take a look at that during this show for sure. That is off 39%. We'll see what kind of volume is behind that move. Apple off $4 right now. Zillow down $3. VIP Shop Holdings, they've been struggling out there. They're off about 7%. Dick's Sporting Goods down 5%. Our call-in number is 877-927-6648. Let's begin by taking a look at the S&P 500. Let's go see what this is doing here today. Right now, traveling out at 1650, basically 1649.63. We want to pay attention to this here today. It is just slightly below the 0.382 retracement, so it's made that. We want to also be paying attention to this May 22nd candle session. The low is 1648.86. You're trading above it today. You traded just slightly below it yesterday. Now with much conviction, you know, yes, we're inside the lower part of the range. You really get to the lower part of the range when you get below 1648.86 out there. So you're traveling just above it. Today, if you do get a close above yesterday's open at 1655, you'll have your first bullish reversal candle in place. That would be the candle that would then set up the B to the C of the A to B equals C to up. Where can that take us to? I'm glad you asked that question. Well, the first logical place is going to be the dead cat bounce. That's 1670 out there. That's assuming that it takes place, and I believe that it will. I believe it'll take place today or tomorrow in the marketplace. So if it takes place from here, you're looking at the first bounce being 1670. That's your dead cat bounce. Your next area would be 1685. That would be your 0.618 level. And if there's any kind of volume that does come into the market, well, volume or not, just depends where price moves to. Those are your two normal target areas inside the S&P 500. What we also know is that the S&P 500 broke that trend line, and that says, it could go back up and test that. But we'll take things one day at a time. The first thing that's needed today is a close above the yesterday's open, 1655 and a quarter. Let's go take a look at the Dow. We'll do all the indexes first, then we'll go over and take a look at the ETF structure. Now, inside the Dow, as well as the S&P, was also trading into that 1650 level, a primary trading range. The Dow is doing the same thing here, and it's a pullback. Now, if we take a look at the retracement level from June 24th, all the way up to the level here on August the 2nd, that high, what we'll see is the 0.618 level has basically been attained. The exact number, 14,974. What we've seen here so far is a low of 14,992. So 20 points away on something that's $14,000. That is close enough for me. That will work. Now, bullish candle inside the Dow would be a close above yesterday's open. That would be 15,076. So that's another 50 points higher. Not really much of a big move needed in order to get a bullish reversal signal. The Dow is what will really be the key to help us understand where that S&P might go to, because the Dow itself would have to try. If we take a look here, let's go do that right now. Let's get rid of this retracement level. Let's put the new one on the screen. And if you are just listening on your mobile device or listening to us on the radio at listening to us on the radio or your mobile device at TFNN.OBI, thank you so much for doing that. See, I was trying to multitask, and I really messed that one up. Remember, you can always catch the live stream of the show by going to the homepage of TFNN.com, clicking on the button over on the right-hand side. You'll see three little smartphone devices. Click on that. The show will stream live. The show is also archived on Channel 10. And what we're going to take a look at here is the Dow coming off of the high from August 2nd down to this morning's low. And what we're going to notice here is the 0.382 retracement would take the Dow right up to, or very close to, the trend line that it broke. The S&P has broken that trend line a couple of different times. The Dow has not. So this is the first time that the Dow broke it. It did it 2 days ago. I wouldn't exactly say with conviction on August the 16th. That was Friday. Volume was somewhat light. Yesterday, volume was light as well. Nonetheless, it broke that trend line. When you break a trend line, when price breaks a trend line, it wants to go back up and test it. So if we are seeing a bit of a stalling pattern, a reversal in the marketplace, our first key is going to be what happens as price moves up in there. Now, depends on how quickly it does it. If it were to do it today and tomorrow, to get to the 0.382 level, just a dead cat bounce, it would actually have to break inside that trend line. So it'll be the Dow that we really want to be paying attention to. Why? Because it has been weak, and we'll learn a ton from weakness, especially on a bounce. You do get a close today, though, not just above the open of the candle, but above the high, 15,106.39, and that actually will tell me that, you know what, the Dow will most likely move up to about the 15,403. That means the Dow would get back inside of that trend line and make a 0.618 retracement, setting up the A to B, setting up the B to C of an A to B equals C to down. It's a pretty good one, right? You're going from 15,658 to basically 15,000, so you're about 550, 60 points, something like that. So that's a nice move for the, that would be setting up the C to D leg. A to B will equal C to D 60% of the times. The other 40%, it will exceed that. So it would be a nice move and a nice retracement to be paying attention to. But we'll see whether it's today or tomorrow that we see that reversal or move sideways really take place inside the markets. Let's go take a look at the other indexes here. Let's look at let's take a look at the VIX for sure. The VIX, as we know, well, if you don't know, it is above that 50-day exponential moving average right now at 1492. A close today below 1408. Back in the lower part of the range, that would give some momentum to the market to go ahead and make that B to C leg for sure. But right now, we don't see that has not taken place as of yet. The VIX at 1490. Again, the number to be paying attention to is 1408. Let's go take a look here at the Russell 2000. Let's see what the Russell 2000 is doing. Let me I had some other Bollinger or Keltner lines out there. Let me get rid of those. I don't want to look at those on this chart here. We get rid of a number of things out here because this chart is awfully messy, isn't it? We can get rid of even the A to B equals C to up pattern on here. Let's get rid of that. Give me a moment here. Let's see. So get rid of that formation tool. Get rid of the Gartley tool out there. That cleans it up a bit. We'll get rid of. Now, we won't get rid of that because that's where she's moving into. We'll get rid of this. We'll get rid of this out here. So just doing a little bit of housekeeping. So as we take a look here at the Russell 2000, Russell 2000 is trying to get to that May 22nd high, which is 1,008.23 out there. It has not tagged that area, but when I switch over to the futures contract, we'll see that the futures contract, in fact, has tested that May 22nd area. That's going to be very important to us. Why? Because we have the S&P 500 below May 22nd, the Dow clearly below May 22nd. Now, what is going to happen with one of the strong indices out there, which would be the Russell, the composite, the NDX. Well, it's the Russell that's going to be the next piece of information. This market, if the Russell gets down there, you've got 3 out of basically the 4, 3 out of the 5. That would be below the May 22nd level. That would be giving us some very important information. But right now, the actual cash index, that has not tested that level. So look for the 1008.23 area and see what happens there. If I switch over and we take a look at the actual futures contract here, that is on, where's that tab? Give me a moment here. If we take a look at the futures, where did that thing go? There we go. So if we take a look at the Russell 2000 futures, you'll see that that area was touched here this morning. Again, the level there was 1008.40. This morning we had to move down to a price level of 1008.20. So it's been tested, and it has been rejected out there. So to a certain extent, the test of May 22nd, we can say, has been accomplished. Now inside the index, what you're going to want to pay attention to is today's close, because today's close, that will be important. If you get a close above yesterday's open, that would be 1024 out there. Right now it's at 1017. You'd see a bullish reversal candle inside the Russell 2000. What you would also see here in the Russell 2000 is that it's been still traveling inside this rising price channel going all the way back to the November 16th time frame. So prices come down into that area, hasn't completely tagged it. You can see we had the convergence yesterday of both the May 22nd high as well as the rising price channel. We only saw a close below that once, which was on June 24th, and then price got right back inside there. That's on the Russell. Let's go take a look at the NDX 100 as well as the NASDAQ composite. Let's take a look at the NDX 100 first. Another day with a small-bodied candle out here. That is saying that it's losing strength to the downside. Gap down here on August the 15th. Yesterday was a test of that level, but still small-bodied candles. And the same thing, we're taking a look at that May 22nd high inside the NASDAQ. We'll go take a look at the NQ also real quickly out here. That has not tested the May 22nd level. That on the NASDAQ 100 is 3,053.51. You know, you get them all below May 22nd, and that sets up, moves down into that June 24th area. Let's go take a look at the NQ here real quickly to see what it has done. I don't believe it's tested May 22nd, but let me make sure I give you good information out here. No, it has not. The May 22nd level on this is 3,053.50 out here. Inside the NASDAQ, inside the NQ, we're taking a look at the trend line. It's trading right into the trend line. Has not broken that, so has not really broken down because it's still above that May 22nd level out there. Small-bodied candle as well, telling us that it is losing the energy to the downside. If we go and take a look at the composite here before we go to break, and then we come back from the break, we'll go take a look at the ETFs out there, the ETF structure. Inside the composite, you can see the strongest of them all. How about that, folks? Because the May 22nd high, nowhere near that level. That's 35.32 out there right now, trading at 35.98. 877-927-6648. Be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Mcwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob Mcwen, as chairman, CEO, and president, owns 25% of the outstanding shares of Mcwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, Mcwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, Mcwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about Mcwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow up 25 points right now. S&P up 5. Composite up 15. Russell 2000 up 6. So let's go take a look at the ETF structure out here, see what we have going. So you got the Dow Diamonds. If they close like this today, that would be a hammer candle out there, albeit very small. So I would say with that small candle, we won't really pay attention much to that hammer candle. But you do get a close here above yesterday's high. That's what I would really be targeting, 150.72. That'll give you your indication that the bounce is underway. We can see that the Dow has made the 0.618 retracement. That sets up the diamonds at least going and tagging that trend line that it broke off of the November level. Again, if we take a look here at retracements now from the high to the low, that would be the August 16th area, just to give you some markers and areas to be focusing on. First, if the Dow can get inside the trend line, that would be probably testing right around the 152.11 area, which is your 0.382 retracement. If you can get back inside there, that's what sets up the move to probably the 153 to 154 range out there. It just depends on the volume configuration. I would say most likely it would be a closing of the gap that was created on August the 14th. That would become your target level. And that is a number of 153.11. 153.69 is the 0.618 area, so that is your target. That would be your range inside the Dow Diamonds on a move higher here on a reversal in the market. So if we go take a look at the SPY, and we'll look at the same thing. What it has done only is a 0.382 retracement. So the SPY, even though it's broken down through the trend line here, all that it's done off that June 24th low, from the low on June 24th to the high on August 2nd, is only a 0.382 retracement. We've seen volume start to dissipate in the prior two sessions out here. Yesterday's volume on the way down, only 96 million shares versus the gap down with 152 out there. Also, we take a look at that May 22nd level. The low here is 165.17. You're 165.34. You're back inside that candle session. So not really breaking below that says, something to think about. So inside the SPY, most certainly what that wants to then do on any bounce, again, the same thing. We're going to go from the August 2nd high. It's going to contend with that trend line, most certainly. The 0.382 retracement is 167.14. That's when it'll run into the trend. If that's all that it can do, that's a significant. It bounces up with light volume. That sets up a potential large A to B equals CD down. The normal move is the 0.618 retracement, which is 168.60. That will take you right to the bottom of that the August 14th gap, which happens to be 168.70. So 10 cents away from the 0.618 retracement. That would be the target of the SPYs. If we go take a look here at the Qs. Inside the Qs right now, we'll see if we can get something going here. That's going to be important for us to pay attention to. The Qs here right now traveling out at 75.67. Of course, their retracement has basically been nada. If we take a look here at coming off of June 24th, there's been no damage done inside the Qs at all. The June 24th low all the way up to the high there on August the 13th, in this case here, because that's when it completed. It's 1-to-1, A to B equals CD. Look, the dead cat bounce at 0.382 level will be 74.17. So far, the low inside the Qs shows you how strong this has been 75.29. It has not even made the dead cat bounce out here. So, on a bounce, what would the Qs want to do? Well, most certainly they'd want to go ahead and close the gap. That would be, and go back and test that level. Now, the gap down here on this had some volume, 39 million shares. The high was made with 23 million shares. Nonetheless, the market's not going to bounce without the Qs as well, and that would say want to go close that gap, which would be a low of about 76.70. Right now, that's trading at 75.65. The IWM, let's finish this off. Take a look at the IWM. That was trading right into both horizontal and diagonal support. That diagonal support coming off of the November 16th low, that's a trend line that has not been broken. The horizontal support being the low, or being the high of May 22nd, that's got 68 million shares out there. Never got down there entirely, but if we did get a close today above the high of 101.88, that is yesterday's high out there, that would give us our signal of a reversal underway. Where would that take us to inside the IWM? Well, the first place would be 102.55. That's your 0.382 retracement. I suspect much higher, and that would be the IWM going and filling its gap. And its gap here would take you just above the 0.618 retracement. That would be to a level of 104.01 in the IWM. So the IWM still looking strong. The strongest out there clearly is the 3 Qs, second strongest here being the IWM. Quick look here before we go to break at the Euro US dollar, see if that is still breaking out above its highs, and looks like, in fact, it is right there on the edge. The edge being a price level of 1.3415. It's at 1.3423 right now, so it is threatening to break out above the 0.786 Gartley sell pattern that was in place out there. Something to think about. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom OBrien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom OBrien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 23 right now. S&P's up 5 at 1651. NASDAQ up 16. Let's take a look at New York Stock Exchange. Oh, New York Stock Exchange up 23 points. Net advancing issues 998, 1,000 now. That says that you've got some decent market breadth here on the move higher. So you've got advancing issues outpacing declining issues at nearly a 2-to-1 pace. That's probably more important than the mere 0.25% that the New York Stock Exchange is up. Leader in the clubhouse percentage-wise is the NASDAQ, is the Russell 2000. So strength coming back into the market. Had a question from the Tiger's Den. And folks, if you haven't had a chance to test out the Tiger's Den, especially because you get to see all of our charts in HD, do yourself a favor. Go over there. Incredible group of people. You know, it's always really about your peer groups. When you're trying to move to another level, maybe it's, understanding more technical analysis in addition to just hanging out with us here at TFNN. Hang out with us in our Tiger's Den. We've got Mitch in Boston. He's taking a look at Zillow. Z is the ticker symbol. And his question is, will Zillow reach the gap? Zillow right now is trading down $3.60. That's off 4%. Now, as we take a look at Zillow, the gap that he is referring to is the one that was formed between July 31st and August the 1st. July 31st, the high was 74.16, 466,000 shares. Gaps up with wide price spread, accelerated volume. On that next session, the low of that session when it opened was 76.11, 1.4 million shares. So that you had wide price spread and accelerated volume. The question is, will it fill that gap? It may be. Let's first take a look at where price is right now and what is holding it in place. And it's nothing more than Leonardo, not DiCaprio, but Fibonacci. If we take a look at the Fibonacci summation sequence out here, we're going to take a look at the price level of about $79.99. $79.99 happens to be the 1.272 expansion of your swing point here from August the 8th low all the way to the high that was put in on August 9th. You also see that coming off of the low here from July 31st to the high that was put in on August 9th, it also is the 0.618 retracement. And then if you go back a bit further, all the way down to the swing point of July 5th when it traded out at 54.38, to the high that came in on August the 9th, you'll see it's a 0.382 retracement. So I will tell you that Leonardo would say you've got some pretty decent support here, Mitch, and whether or not, now you got volume, so now that's what the Fibonacci numbers are doing. So for whatever reason, price has stopped there. We know what those reasons are. They're just natural areas of support or resistance. Big volume in this equity here today, but they're also doing another offering, so you can expect some big volume out there. The question is, will it go ahead and get back to the gap? If you get a close below today's low, $79.99, the answer is yes. It most certainly will. And then you could take a look at stepping into Zillow as it fills that gap right around $70.70. But right now, the uptrend on this thing has not been broken. We saw a slight gap down here, but the volume, which was on August the 19th, so that was yesterday, that volume was 1.9 million shares. But that was, again, going up against this session here with that 2.7 million shares from August the 7th. So as it was coming down to that little bit of a downdrafty session out there, it was not that big of a deal out here. So Zillow, a little bit more of a difficult call. If you're looking to get in, maybe you want to take a look at some type of scaling program to get in on Zillow. Or better yet, just wait to see what price does here tomorrow. So on Zillow, that's why price has stopped where it is, because of Leonardo Fibonacci out there. For whatever reason. Let's go take a look at some of these things here that are popping and dropping. We haven't looked at anything on the dropping side, so let's go do that here right now. Leader in the clubhouse is LITB, Lightbox, which is down 38% with major volume. Now, this has come all the way back to its IPO date. Quite frankly, with more volume than took place on the original IPO date. Well, not just yet, but looks like that's what the case will be when the trading session is over. This thing had an IPO on June 6th, the low of which was $11.09. It's trading at $11.80 right now. Total volume that exchanged hands that day, 8.8 million shares. Boy, today it's already done 5.8 million shares. We're only an hour into the trading session. LITB is the ticker symbol. It was a high flyer, and looks like the kite broke on that sucker on Lightbox. So, I'd say stay away. It had this nice reversal pattern up here, I guess giving you a signal that there might be problems in River City. It had this evening star formation that was including this gap down here. So that was your first indication that there might be trouble in Paradise, and that is on Lightbox. So it looks pretty darn nasty out there. Let's go to Dan in Baskin Ridge, New Jersey. Dan, thanks for calling. Thanks for holding. How are you today?
All right, Steve. How you doing?
Excellent.
Hey, want to touch base, and we're coming into a full moon, and just looks like our last peak was on a new moon. And just want to touch base, see what your comments were on the lunar cycles.
So when it comes to the lunar cycles, I've got my lunar cycle, one of my lunar cycle charts up here on my screen, and you're absolutely correct in that the last new moon, if you give it 2 days worth of movement, came in on August the 6th. The actual high came in on August the 2nd. So you'd given it 2 trading sessions, but really you're giving it, 4 actual days to determine that it did work. But you could say, there was a new moon high out there, and that full moon, in essence, on the same ephemeris would come in tomorrow. And the thing is that, so if we take a look at the last several full moon, new moons. You can say, okay, the last new moon worked. Maybe this full moon here is going to work. Let's go back one step here. That would take us to the full moon on July 22nd, and that ended up marking a short-term high. Nothing really significant because that high was taken out on August the 1st out there, but it had a slight type of movement, a slight high out there. If we take a look at the lunar phase before that was the new moon. Well, that did really nothing. The market was moving up. It certainly didn't reverse patterns there on July the 17th. So what I would say is that as I take a look at the full moons and new moons, I don't have enough evidence, in my opinion, to say that it's really the lunar strategy of full and new moons here that are really working as great magnets to call highs and lows in the marketplace. Just haven't been working consistently. I'd like to see more consistency than what we've seen coming off of the November lows out here. Instead, I think there are other things in play. Are you looking to tell me how you're going to use this from a trading standpoint, and then maybe I can better assist you.
Sure. Yeah, it's not like an exclusive strategy. Basically, I was short, and I was looking to cover my shorts for a bit. And that was just kind of the tipping point where I said, you know what, just looking at, I just thought,
sure.
Hey, let me just close the positions, give it a day or so to see how it pans out, because it just looks like the stochastics and the MACD are not really crossed yet on the SPYs. But, I figured let me just see how things pan out for the next few days.
Sure. So and I will tell you, I did the same this morning. And I sent out to my subscribers at 8 o'clock this morning that there's going to be a bounce that's going to take place. And so we tightened up our stop on the short position that we had inside the Dow. And we tightened it up, quite a bit. And I just said, well, we'll go ahead and let the market go ahead and take us out, because I gave them the reasons, lined up all the reasons why the market should either pause or form a bottom here, even a bottom. And gave out the parameters that we're looking for to even take a potential long trade out there. I would say the lunar strategy, so what you've done, it makes a lot of sense. There were a number of other factors out there, in my opinion, that were more important than the mere fact that we were coming into a full moon. But like you said, to use it as an additional piece of evidence to either tighten your stops or go ahead and close out your short positions, to me, I think that was a good move, Dan. Smart move.
There was one thing, though, that I was considering. Larry, on one of Larry's programs, he said, you know what? If you go for the calculator to figure out how much you're up, that's like the best indicator. And I got to tell you, I mean, that seems like it's by far been the best indicator for me, is like if you're checking the profits.
Yes.
That's but you know what? That's one thing that really hasn't hit on this, because it just seems like it hasn't. I haven't gone for the calculator yet, so I was kind of hesitant as far as that goes.
Yeah, no, and look, it's there's always those good little tools out there. The most important thing, the smartest thing, is that you're managing your trade, and that's the key. And you're adjusting stops, or you're going ahead. Now, look, you took profits, and so that's all that this business is about, is taking profits. And you can't sit there and ever beat yourself up because you took profits, and you know what, you could have got more out of something. Because if you were trying to play that game, and then you're striving for, in my opinion, we end up striving for something that we just can't attain. That would be like us saying that we know exactly where the market's going to go. And I don't know about you, but I don't have that. I don't have that ability.
Absolutely not.
But we do have the ability. We do have the ability to go ahead and manage a trade and make money. That's the only ability we need in this game.
Cool.
All right, Dan.
Appreciate it.
Hey, thanks so much for calling. Let's go out to Bob in Louisville. Bob, thanks for calling. Thanks for holding. How are you this morning?
I'm fine, and thanks for taking my call. I appreciate it.
My pleasure.
It's both of our pleasure. Hey, listen, I just have not been able to hear you or Tom or anybody in the last 3 or 4 days.
Okay.
But I saw this bounce up in gold this morning.
Yes.
And, I had kind of thought all the gold stocks had kind of done an ABCD up, and we're going to consolidate for a while. But, now we get kind of this turn. So just kind of wanted to get your thoughts on the next 3 or 4 days. Where you think gold is going to go?
Are you in a trade? Tell me how you use the information, and then I'll.
I talked to you last week, and I took profits in my nugget.
Perfect.
And I'm very happy.
Good.
And I thought, well, maybe it's time to flip into dust. But then this morning happened, and now I'm kind of scratching my head.
Okay, so we'll start off by taking a look at gold. Now, here's my first opinion: is that don't be looking to short this market. Instead, just be trying to focus on where it is that you would go along, because these mining equities, they're off of the bottom. And so the trend here has clearly changed, and we've seen that when we spoke. If I recall the conversation, and if it wasn't you, that's okay, because we'll expand on that conversation. Is because you were trading the nugget out there, and you're thinking of dust. What I would do, Bob, with your time, is spend time taking a look at the actual mining equities, because some of them are much stronger than others. So when you're playing the NUGT, you're playing the GDX, you're playing the entire basket. And I'm suggesting to you, not because I don't know the answer to this, because I do know the answer to this, but I want you to go gold mining, okay? And by gold mining, I want you to take a look at all those equities that make up the NUGT. You do that by just simply go to Yahoo Finance, type in the GDX, and it'll list out for you. Or just you can search for it, and you get the exact holdings within inside there. What I think is the better move for you is go find those stocks that have performed the strongest and look at those for pullbacks to whatever areas make sense. It might be just a normal retracement. It might be a high volume bar that they could come back into. Look for some pattern out there that you would trade, and then start building your positions there versus playing the entire group out here. I think that would be the better. That's another alternative play for you. I suggest that you would do that. As far as your question, what is gold doing right now? To a certain extent, one could make the argument that it's not doing much. And the reason why I say that is because the U.S. dollar index is back 36 pennies. The U.S. dollar index is back pretty strong. So now, so the correlation, and we know that correlation has gotten a little cockeyed here between the U.S. dollar index and the metals. So you got to really treat each irrespective of each other. But if you were paying attention to that, you'd say with the U.S. dollar index being back 36 pennies and gold only being up $9, it hasn't broken out. It's really got an inside day. It's trading inside the same little consolidation that it has for the last 3 days out here. However, I do believe that gold has an A to B equals CD up that'll take it to 1440. 1440 to maybe the 1463 level, which is the 200-day exponential moving average. And that should put some energy and that should put some juice into the mining stocks as well. But because you're already in, you're already at a profit, you already took your profits off the table, I wouldn't be adding to a position here. I would instead be waiting for a pullback in order to buy either the ETF, if that's what you want to do, or those gold and silver stocks that you want to take a look at.
Makes sense to me.
I hope that helps. So, Great job on booking profits, because that's what this business is all about. So great job there. And now just go do some gold mining. Go do your homework. You can sit back. You can find the spots that you want to wait. Get those trades set up and wait for it to come back to you. All right? Okay.
I appreciate it so much.
Hey, you bet. Thanks so much for calling, Bob. That was Bob in Louisville. He was taking a look at the NUGT, which is the 300% move of the gold miners stocks out there. So, we're speaking of gold. You can see here, yes, it's trading up about $9 right now, but really not breaking out or anything like that. It does have more room to run to the upside here. We'll see if it can get some energy into it. Silver itself, silver's been really the big mover, and that's where Bob and others should really spend their time really searching around, looking for a pullback in silver to add that one to the portfolio. Silver here right now trading out at 23.21. You can see, again, these bodies of these candles here, very small bodied. Even though we've had a nice little reversal today, the body is the essence of price. And it's telling us right now that silver is a little bit tired. Should be after that move off of the low of $19.10 only a few trading sessions ago. August the 7th out there? 877-927-6648. Dow's up 36. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 34, S&P is up 7. And if you haven't had a chance to test drive my newsletter service, Mastering Probability, if you'd like to understand, today's issue is probably today and yesterday. They're all really good issues, but today and yesterday especially. So if you haven't had a chance to test drive, if you'd like to have and understand a set of tools, how at 8 o'clock in the morning I could be able to put out a newsletter that was able to forecast that we should see a bounce, either a bounce, move sideways, sideways, the exact parameters to look for, how to be able to manage your short trade that you would be in, your short trades, how you would be taking a look at where we would go ahead and take a look at putting on a long position out there. All of that's laid out for you. So I give you the complete formula. You can test drive it. Comes with a 30-day unconditional money-back guarantee. There's like 30 to 40 hours worth of other educational resources. Yesterday's newsletter was especially long because of the analysis that I did of each of the indexes, the S&P, the Nasdaq, the Composite, the New York Stock Exchange, the Russell, the Dow, taking a look at the weekly, the monthly, the daily charts, exactly what the parameters, which will help you to be able to manage your short-term trades, your long-term trades, your 401k, your retirement accounts, maybe what boxes you might select out there. Maybe you don't have to be an active manager of your money in order to be able to want to understand exactly what are the parameters for when you would go ahead and maybe get out and go to cash or whatever your options are in some of your trading. All the details are on the homepage at TFNN.com. Do yourself a favor, especially by taking a look at both today's and yesterday's newsletter service. Now, what are we going to pay attention to today? We're going to pay attention to what kind of close it is that we get. We get a close above 1653 in the S&P futures contract. I don't mean like 1653 and a quarter or 1654. I mean probably, let's just make it easy, above 1657. Get a close above 1657, and this mark is absolutely going to bounce and bounce significantly higher. If we take a look at what that would mean inside the S&P 500 itself, we gave you those parameters earlier, but let's go back and take a look at that. Those parameters here in the S&P 500 most likely would be at least to the top of the gap, which is the August 15th high, 1679, but more likely filling the gap at the 1685 range. Right now it's trading at 1653. So you want to pay attention to that. There's no possible way for the bulls to actually take control of the market today. They would need a total net advancing issues of 5,285. So it'll take days for that to happen. We would have some other. There is a possibility that a significant bottom is being formed out here. So there is that possibility. What we do know is this: the bears have control of the ball, and until they lose control of the ball, all that we're looking at is the B to a C of an A to B equals CD down. But it could be one heck of a nice move on that B to C, because if you take a look at the A to B leg of the S&P 500, you're going from 1709 to 1645. What is that? That's a 55 and 7. That's a 62-point move. That is a nice A to B equals CD down. So just like our other callers, Dan from Baskin Ridge, Bob from Louisville, make sure that you are managing your trades out there, that you are adjusting your stops, that you're letting the market prove itself to you. Make sure that you do that, because you want to make sure that you are protecting those profits out there. Don't try to get and squeeze the very last profit dollar out of there, the very last nickel, quarter, penny, peso, shekel, euro. And speaking of the euro is something you're also going to want to pay attention to, because the euro is trying to break out over its highs. That may put a little bit of oomph into the silver and the gold marketplace as well. So, folks, it's a terrific Tuesday. Thanks so much for being here. Stay tuned. Another great lineup for you for the entire day. I will look forward to seeing you in the morning. Remember, do not be a prisoner of your past. Instead, be a pioneer of your future. Have a great Tuesday, folks. Look forward to seeing you in the morning.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.